Hey harvesters, and welcome to Project Premium Harvest. My name is Matt. In today's video, we're going to be going over the premium I made for April 17th. I did it in two different ways. One was a cash secured put and the other was a covered call. I'm going to go into detail how cash secured puts operate, and then I'm going to discuss the considerations I made when selecting a specific option and a specific strike price. So let's get started. You guys know me. The first thing I'm going to talk about is my account value, and it's currently trading at $85,021.40. The market, or specifically the S&P 500, is doing a little bit staying neutral, chop down, neutral, chop down, neutral, chop down. And therefore, I'm trying to play and find a way to take advantage of the current market conditions. So that's what it is. Now let's jump over to the spreadsheet so I can discuss what I did, how I did it, and then we'll go back to Robinhood, and then I'll physically go through the motions of what I plan on doing for next week. All right, guys, before going into detail about the specific strike prices I chose for the options, you have to understand what price I bought my 100 shares of SPY or 200 shares of SPY. The first 100 set of shares I bought was at the $527.82 mark. The second set, I bought these shares at the 540.29 share price. Knowing that, I'm usually trying to choose strike prices that are somewhere between $5 and $10 away from when I bought in at, or at least from the at the money trading price. So now let's go down and explain how I chose my options. So because the SPY was trading at $527.12 this morning, I chose a strike price that was $6 away, and that netted me $97 a premium. It came nowhere near hitting $533 today. So therefore, that was a very safe investment. And I think it's relatively conservative. Now, if we go over to the second contract where I bought in at that $540.29 per share, I chose the 541 strike price. And in hindsight, I definitely think this might have been a little too conservative, especially because I think the market is going to be trending downwards until there's very positive news coming. And so maybe next time I should have picked something at the 535 or 536 so that my premium would have been a little bit higher. And so I just started running these daily covered calls, last week. So I'm definitely trying to fine tune how the market is performing, and then the fine balance of risk to premium to asset appreciation. So I definitely think on Monday, depending on how the market's looking like, I'll probably be a little more aggressive and choose a strike price closer to the actual trading price for SPY at that day. The second way I made money today is I ran a cash secured put against Nvidia, or NVDA. I made $4. That's kind of a joke, but I did this more so for testing a potential strategy that I'm going to enact next week. So I chose Nvidia at the $94 strike price. So basically the way that a cash secured put works, it's the opposite of a covered call. A covered call, you have to own 100 shares of the underlying so that you can run a contract. Someone's going to pay you an upfront premium to lock in that share price if your shares appreciate to a specific point. Cash secured put is the opposite. You don't own 100 shares of the underlying. However, an investor is going to pay you a premium so that if the market continues going down or their underlying goes down, you're going to choose a strike price, and it's going to lock you in at buying that underlying at that specific price. So basically, the investor is trying to offload shares and is willing to pay you money at a specific point to do that. So for me, I don't necessarily think you should be using your own cash for running cash secured puts, basically like owning it and selling it. I think what makes the most sense is you continue to own like 100 shares of a specific fund, your whatever underlying. For me, I'm going to be owning SPY as much as possible and continue to keep adding more and more SPY shares. And let's play a hypothetical. Let's pretend that we're not on margin. I am on a margin a little bit. Let's pretend we're not on margin. So say that $85,000 of my account is not margin, it's just pure cash, it's good to go, and I'm invested in SPY. What I would do is I'd actually run cash secured puts against the S&P 500 or whatever underlying, maybe Nvidia, Palantir, Oracle, Amazon, any type of great stock that has a recent amount of volatility, because volatility is what's necessarily going to pay you a higher premium. And so what I would do is, instead of owning those 100 shares, I would choose really low strike prices that I don't think are actually going to hit, and then run a cash secured put. So an investor is going to pay you to buy the shares at that specific price, and to choose a number that you're not actually anticipating it hitting. And guess what? If it does, if those shares do get assigned to you, you can turn around real quick, and then basically it's called a wheel strategy, and then run at the money covered calls for that specific fund and make a ton of premium at a really good price. So there's that benefit. And the way that cash secured puts work is they don't necessarily use margin, and they don't use your cash until you actually get assigned. So they put a certain amount of money for collateral, and then until you get assigned, that's when you actually have to use your margin or your money to then buy the shares. But this is good because if you have buying power available, you can receive extra money not owning shares and not having to pay for extra margin. So it's like the infinite money glitch. So I'll show you what I'm talking about once we get to Robinhood. But in total, for April 17th, I made $113. And then so far, since I've been doing options trading, very safe options trading, covered calls, and then I guess cash secured put as of today, I made a grand total trading just 6 days, $2,537.03. That is pretty freaking good if you're to ask me. That is way better than any of the other high income ETF stuff I was invested in. No NAV erosion. I think we found a winner here, guys, and we're going to continue to do this, rinse and repeat. And all of us, we're going to get there one day. We're going to be swimming in money, driving Lambos. All right, now let's go to Robinhood, and then I'm going to explain what some of the thought processes I will be doing for next week. All right, guys, now that we are back to Robinhood, let's go to Nvidia and explain what I plan on doing next week with the cash secured put. So I plan on buying 2 contracts. I don't plan on buying. I plan on running 2 cash secured puts. Basically, investors going to pay me for 2 contracts of Nvidia, and then I'm going to choose a specific strike price that I don't think it's actually going to achieve, and then lock in some cash. Nvidia, their option strategy is a week long, and then after that week, rinse and repeat. But there is their earnings coming up, I think April 27th or 28th, if I remember correctly. So something to consider. I don't want to hold any options or risk shares getting assigned or big dips or big spikes. So I'm trying to avoid that. So I probably would maybe skip receiving a cash secured put until after earnings. But let's go to the infinite money glitch. You guys see this button here, trade Nvidia options. That's a money printer. Let's click the money printer. All right, and so what we plan on doing here is we're going to sell a put. So what I do with the SPY shares, I own the 100 shares, I do a sell call, but in this circumstance for Nvidia, we're going to do a cash secured put. We're going to do sell put. And for the sell put, currently Nvidia is trading at that $101.27 mark. Basically, if you were to buy this 102 or 101 strike price, you'd be getting $340 or $298 of premium for owning the share, and you would consider this at the money. But what I plan on doing with this cash secured put is choosing something I don't necessarily think is going to hit. And I think this $96 or this $95 mark isn't actually going to hit. And so if I were to run this cash secured put, an investor would pay me $135 or $114 so that they can force me to buy the shares at this $95 mark. I wouldn't say forces. I'm agreeing to buy these shares because they're paying me an upfront premium to lock in the shares at this $96 or this $95 mark. I'm thinking I might go this $95 mark initially. And if for whatever reason after this week, the Nvidia continues to go down and this gets assigned, I think $95 for Nvidia is an actual steal. And I would just run covered calls until I can make a ton of premium or eventually sell out of it at the money. But the benefit of running cash secured puts is you don't actually have to invest your own money until these shares get assigned. So what basically this means is for this to own 100 shares of Nvidia at this $95 mark, you need $9,500 of collateral. So basically they're going to reserve about $9,500 of either cash or your margin so that you can execute this until the end of expiration. And so the expiration for this week-long call is April 25th. It's a week-long call, 7 days. So basically at the end of April 25th, depending on what the strike price is, if it's at 96, so let's say, for example, we got the $95 and we'll just make it very simple. We chose the $95, we continue, we order it, boom, 1.114, review it, and actually execute it. What happens here is they're going to hold $9,500 of collateral, either margin or your cash, so that at the end of April 25th, if you get assigned, they're going to use this collateral and you're going to own the shares and you have $9,500 of Nvidia. Or if April 25th rolls around and the price is $96 or $97, because the way puts work is if it's below $95, like 95 exactly, or 94, 93, you're going to get assigned. But for a put, if you're higher than that strike price at 96, 97, you're not going to get assigned. Calls are the different. If you bought this 404 call, anything at or above 404, you get assigned. So it's just the inverse of what the call is. A put is the inverse of a call. Let's go back to put. So yeah, that's kind of how it works. So what I plan on doing is maybe next, you know, I'll just put the order in right now. I'll just do 2 cash secured puts. So I'm going to make $227 extra of cash on top of all the SPY stuff I was running. We'll do good till cancel and review the order. And because I'm running 2 contracts at this $95 mark, I'm going to need $19,000 of collateral that they're going to hold off to the side, so that just in case these shares get assigned, they have it set aside, and then I'm actually going to own the shares if they get assigned. But if at the end of April 25th, it doesn't hit below $95, I basically cash that premium, don't have to buy the shares, and then I could do the same thing again next week. So it's literally infinite money with using as little money as possible. Some people said using a cash secured put is stupid. I disagree. It's just another tool in the toolbox, depending on how you want to invest. It's just another mechanism for more money. Theoretically, running covered calls, you're going to net more money. But if you're trying to not use money, cash secured put is another mechanism. But let's lock this in. Let's submit this bad boy. Boom. It's in, guys. So now we wait until Monday to see if it executes or not. I probably might readjust it. I might actually cancel those and then readjust it come Monday morning so that I can see if, you know, Nvidia is like getting crushed or if it's going up. I might readjust the strike price. But now let's talk about these SPY covered calls. So let's change this back to SPY, and we're going to discuss some strategy here. So for SPY, let's go to the money printer option, the trade SPY options. Click on that bad boy. Make sure that we're doing sell call. We don't want any of this buy stuff. We don't need to be spending money like that. Now let's go over to the 527 mark. Okay, guys. So you have to remember the 2 sets of 100 shares of SPY I own. One's at 527, the other one's at 540. So we're going to come up with an idea of which strike price we want to choose. So because the market was trading a little bit down, I think it would be pretty safe to choose for my 527 SPY. I think I might choose this 532 because it's about $5 away from that buying price of 527. So theoretically, if I were to get these assigned, I get $500 of appreciation and I'd get almost $200 of premium. So that'd be a $700 profit in one day. So I think that's really good. So I definitely think this option at this 532, we might do this 533. Maybe it's a little more conservative. I don't necessarily want to sell the shares, but I think let's do this 533 again. I'll probably bag somewhere between 166 and maybe like 120 in premium for that one contract. And so I think for my shares at the 540 range, I think I'll be a little more, I won't be conservative. I think I'll be a little more aggressive. I might choose something at this 536 mark because I haven't seen SPY move up that high unless there's really positive news. And I don't think anything's going to happen. Maybe it depends what happens over the weekend. If there isn't anything positive over the weekend, I might choose something at this 536. I might risk losing my shares. I might lose like $400 of appreciation if this happens to get executed, but the money I would make from running this, 533 call would even out. So theoretically, it wouldn't matter. That's just kind of a consideration to take. I have one more thing to point out in this video, and then I'm going to give my final thoughts. I want to do a special shout out to the community. You guys are the reason why I surpassed 2,000 subscribers today. This morning, it hit 2,000. I couldn't believe my eyes. When I woke up, I had to rub my eyes a little bit and take a look, and I couldn't believe it. I started this project about 11 months ago, took a HELOC loan, doing crazy stuff, and you guys were crazy enough to follow me on that journey and to see where it's at today. I appreciate every single one of you guys for liking, commenting, subscribing. It means the world to me. You guys don't even understand. Every time I see a comment or a like and people are actually enjoying the content I'm putting out, it really does bring me joy. So I just wanted to thank you guys. I'm not very well spoken with Riz and making you guys feel special, but from the bottom of my heart, appreciate you guys. And now let's go to my final thoughts. Today, the premium was a little bit lighter than the previous 5 trading days. However, I think I was too conservative. And with that being said, we talked about what I did and then what I could do better. And I think on Monday, depending on how the market plays out, depends on what kind of news is going to happen over Easter weekend, we're going to see what the premium looks like, how the market is trading, and then we're going to make some determinations on the fly on the spot. But ideally, I'm not trying to get my shares assigned. I'm trying to make that premium and then rinse and repeat for the next round. I also plan on running maybe those 2 contracts of Nvidia at that $95 strike price, so I can bag in an extra, $200 of premium on top of all the SPY stuff I have already been running. And the whole thought process with the Nvidia ones is I don't want to get those Nvidia shares assigned. I just want to rack in a little more premium. I don't want to use any more margin. It's just going to use collateral. And then once the shares do not get assigned or the contract or the option expires worthless, then I can rinse and repeat and continue to make more money. For anybody that celebrates Easter, happy Easter. For anybody else, normal weekend, wish you a good weekend. And I will be flying to Chicago for Easter weekend to spend with my family in Chicago. So I may or may not have a video for you guys. The market is closed tomorrow, if you didn't know. So we'll have the day to ourselves and think about what we want to run for next week. But yeah, guys, thanks for watching. Appreciate your support. Hope your accounts are doing well and growing thicker and thicker by the day. And Matt out, and I will see you at the next video.